What's good, YouTube? This is your boy NeFX, and I'm back again with another video. And in this video, I'm going to take you through the steps I took in bagging that 200 plus pips on gold. So without much ado, let's just go straight into the chart while I take you through, the various steps. So before I take any trade, on gold or any other pair, I first go to the daily time frame, to get a fair idea of what the market is intending on doing today. You get it? So I went into the daily time frame, and on the daily time frame, I saw that the bearish descent has already begun. I think I saw the move had already got into this price level, either here, yes, I think here, either here or here. I made a previous recording, but the recorder was, messing up, so I had to, like start all over and like take you through it, like, uh, as in the form of in the past. Because when I was about to take this trade, I was already recording it, but the recorder was messing up. So bear with me. So after I saw the bearish move already got into this side, this gave me my first confirmation. I went to the 4 hour time frame, and I got to see that I further got to see that price had already cleared this liquidity above here. So there's no way that this bearish descent is going to be a fluke, or is going to be a fake out or a lie or something that price will later return back into. No, because the liquidity has been grabbed here 2 times, and on the second time you see this thick bearish candlestick, like that was my confirmation of the downward movement. So I just went to the 1 hour time frame like I usually do, and like it was a bit opened, a bit choppy here too. So I later went to the 15-minute time frame. On the 15-minute time frame, that's why I started like marking out my break of structure and like marking out my fair value gaps that price had not already visited. So when I got here, I saw that I first saw look from above to see if there is any like fair value gaps or liquidity that hasn't been grabbed yet, or any liquidity like possible liquidity zones that price will revisit. And there was nothing here. Everything has been cleared on except this side, this zone. So price broke structure here, went up, grabbed the fair value gap within this zone, and like came down, went back there again. So I was looking to take a trade. I think I went further down into the 5 minute time frame. So in the 5 minute time frame, that's where I got to see the double top here, and usually double tops have liquidity above them. You understand? Double tops usually have liquidity above them, and like so, I saw two areas where I could enter this internal range of liquidity here with the fair value gap here, and this very one which has already been tapped into. So like my main focus for entry was initially this fair value gap here, because there was a fair value gap, like price has already like grabbed the liquidity above this particular candlestick here, come down, but it hasn't been revisited yet. You understand? So it created a fair value gap and an order block here. So my main focus was there. But after seeing this 5 minute fair value gap being taken out, so after seeing what price has done, I further went down because I didn't want to rush into any trade and conclude that there's no way price will come here, because I could clearly see a fair value gap here with an order block, which like is one of my A plus setups I want to see before taking any trade. So I just went further down. I think I first went to the 3 minutes time frame. Further went down to the 3 minutes time frame, and like I couldn't see anything here that will pique my interest to enter any trade. So right now I had two areas to enter. I had this area here, which I will show to you on the 1 minute time frame, and this particular area, this fair value gap here. So as I went deeper, I could see that like this fair value gap after this break of structure here hasn't been mitigated, and there was nothing like hindering it, like it being created or something like. nothing violated it. So I went to the 1 minute time frame. Let me pull this. Let me pull it. Bear with me as bear with me. So this is what I saw. This is what I saw. So when I came into the 1 minute time frame, now there were two areas I could enter. One was here. After liquidity has been grabbed above this particular level here, liquidity has been grabbed here. Price came down, broke this low, making a break of structure, came down, but never visited the fair value gap here. So there was a fair value gap here, which I was targeting, and there was this main one. So this had my 80-90% approval. This particular area, this fair value gap here, had my 80-90% approval that or like accepting that this is the place that like I'll be taking or risking a whole lot on at that particular price, like at that particular entry. But all the same, this was also a viable entry. This was also a possible entry for me to enter because there was liquidity grab above this area with a fair value gap. And like what made me think like this could also play out was the fair value gap here, sweep of liquidity above this previous price level. So my first trade I took, I waited as price entered here. As price entered 1 2, I waited. Like I wasn't well convinced because when price came, it started reversing again. So I waited when price. I think I entered when price came into the fair value gap. Made entered. I think half of the fair value gap. That's why I entered the trade and placed my stop loss. My stop loss above here like this. Above this double top here. While I target my initial my target, like I target very very low. Like my TP was a previous order block which was broken, which led to that massive move that price made to the upside here. So let me take the 1 hour. So after I took the trade, I targeted this low. Uh, I targeted this low here. Yeah, this also my target was, I think, yes. So after I entered this, I've already been targeting this area. This was my area of interest where my target was this, like previous daily high. So after I took the trade, you can clearly see that price initially moved in my favor. Price initially like moved in my favor. Price initially moved in my favor, giving me I think 40 pips from my place of entry to here. Gave me like 40-50 pips, but I wasn't around to exit the trade after it broke back here, because after price broke back here, I would have gotten out because this will clearly tell me that no, price will be targeting this main fair value gap that I had already targeted here. Price would like visit that area. So when I came back, I had already taken a loss, but I wasn't much bothered. But I was rather like confident that now the next trade I will take, because in a day I prefer to take 2 to 3 trades in a day. So like after I came and I saw the loss, I was more convinced that now price will visit my fair value gap here and my order block here. So I just waited patiently, and I'm on a 1 minute time frame. Price was moving up, moving up, moving up. So when price got here, it shied away from my entry. I didn't think much of it, so I just set 3 pending orders of 0.05, 0.05, 3 of them here. I set one at the entrance here. I set another one on this, uh, like on this area, the 0.5, which is the like 50% of the premium and and a discount price area, and I set another one on this blue candlestick right here. I set one, not candlestick, sorry, on this blue line, in this blue indicator right here, and I placed my stop loss. So let me just show it to you. So I entered around this area right here, this area, and my stop loss wasn't that far. My stop loss was, I think, roughly 16 pips. 16 pips. It was crazy. I think 16 pips. Yes, this was where my stop loss was, and my exit. Sorry, and my exit was, my area of interest where my target was my TP area, and I left it, and price came down, like did its thing, created this other block nicely and everything, came back, revisited it. So as soon as I saw that price has revisited this area without breaking above it, I was like, hey, I'm done. I'm done. Like, I just sat down, watched price, marked my TP1, TP2. I think this TP1 here was the previous trade I took, the one I took a loss. So I even first hit my TP1 and was about to approach my TP2 when, like, it reversed back. So I marked that place as an area of interest. So when price started moving in my favor, moving in my favor. See, as price was moving, I was also marking out possible entry area, but I didn't take any trade there, and I didn't also post it on the Telegram channel because there was no one on the Telegram channel. So I just take the trade by myself. So went in there, visited two times, came down. So as price after price breaking this my TP1, I was waiting for it to break my TP2. When you go to the TP2, see how price was behaving. Price touched it a little bit, then reversed back up, came down again, touched it, reversed again. So as soon as price started reversing, initially I was about to panic that price will start reversing against me. But as soon as I saw this fair value gap here, liquidity grabbed on this previous fair value gap and everything. I was like, nah, there's no way price is going to reverse against me. And just look at this, broke sharply, tested my TP1 from below, came down TP3, and it started acting some way around TP3. And then as soon as price breaks TP3, there's nothing for me to worry about anymore. And just like that, price just came down, and hit my 200 plus pips, which you can clearly see here. 228 pips caught in one trade. And that's not all. I thought price would have reversed after hitting this previous order block here. This was an initial order block where price, I think in the previous days, price visited this area so many times and price finally broke out of it. So I thought after price getting here, it will like reverse back into its previous move, which was a bullish trend. But you know, the best took over the market of gold, and like just make the price move an extra. So I think this whole trade, if I had just chilled my stop loss and left it to run, I might have caught from my entry here. I might have caught how many pips? 495, which is like almost 500 pips. You might have caught the paper. Hey, you shouldn't be greedy. Just take what your strategy tells you to take. So this was what my strategy told me to take, and I was confident in it. I was ready to make a loss. I was ready to make the win. Either way, I was good because I was applying proper risk management, and this is what I was rewarded with. 1:13. 1:13 risk to reward, bro. 1:13 risk to reward. I would like to thank you all for sticking with me to this far, and I would like to urge you all to like, subscribe, and leave a comment if you've already not done that. And I would like to encourage each and every one of us to keep pushing, keep grinding, and we are all going to see positive results because I've been in this industry for 7 to 8 years, and I'm now seeing my consistency. So let's all keep grinding, let's all keep pushing, and we are surely going to break through. So thank you all once again, and catch you guys later in the next video. Bye.